All right. Anyway, I'm never going to be able to do this. You know that. Who said they were a techie person? You can just stay up here. You are. You could just sit here, you know, all day and just keep. And I can keep it. It'd be kind of fun. All right, everybody got that one? It makes sense? No. Paid for the supplies purchased in D above. What do we pay for them up there at D? You guys write this down. How much? 300. Okay, and it was on account payable, wasn't it? So what are we going to pay it with? Cash. It's an asset. You have less. What do you want to do? Credit. How can people get paid a lot of money for knowing this? I'm exaggerating a little bit, yet quite a bit. Yeah, but what? Oh, why? It's a liability, and you now have less of it because you paid it off, right? How do you reduce all your liabilities, you guys? Every single one of them, the millions there are. How are you going to reduce all of them? Debit. Why? Because liabilities are in the right. They're increased with the credit, reduced with the debit. And why is that? Because debit means left, and credit means right. Does debit mean increase asset? No. Debits do increase assets, but it means left. Okay? Right? So don't fall back to memorizing everything. All right, anyway, so what do you got here? Accounts payable, is that what we say? Very good. Can you see that we are changing the balance sheet as we go here? And we're changing the income statement as we go here. Have you made that connection yet? We're going to do it at the end of this problem. We're going to do a big T account for these things, right? And keep track of what's going on in the balance sheet and the income statement. Assets, liabilities, equity, revenues, and expenses. We're changing those statements. We create the statements using these entries. Debits and credits, debits and credits, debits and credits. When you start a new business, what's the balance in every single account when you start a new business? Zero, of course, nothing happens. And then you start doing stuff. And you start recording it. And you're building financial statements. So then when you look at the financial statements, what are you looking at? What happened? Wow. People say, the author probably already said this, it sounds stupid, but it's the truth. Accounting is the language of business, right? It is. It's how we talk. I don't have to be there and watch everything that happened at every single McDonald's store all year. I can pick up McDonald's financial statements and see what happened. I'm not kidding. And you'll be able to too. And that's kind of cool if you think about it. You want to know what happened to Walmart last year? They got financial statements we can see. They made a lot of money. I don't know why people go there. It's a horrible company. Slave labor. We pay taxes to support them. They recommend to their employees, and McDonald's did this too. McDonald's actually did this. They recommended to their employees who they pay minimum wage, 7 or something, right, an hour. They recommended to their employees that they apply for welfare, food stamps. I'm not kidding. And they told them about, you can go and you can get food banks, you can go and get money. What? You don't think that ought to be illegal? You think, here's your retirement plan. Go get food stamps. Jeez. Thanks, guys. That's great. Anyway, so you got to see the statistics. Go read about it. How much Walmart makes off of us every year, subsidizing their employees so their employees don't starve to death for their health care and stuff. Oh my God! Don't go to Walmart. We can fix it. Stop. If nobody went, what would they do? We all refuse to buy anything from it because they're stealing from their employees. What would happen? They'd all close. They would all close. Really? It's quasi-slave labor, you guys. Yeah, quasi-slave labor. It's really sad. I can't imagine trying to live on 7 something an hour. Oh, God. Oh, God. Anyway, oh well. Received $100 the amount. Yeah. How many hours worth did I spend last night on a couple of classes of wine? Yeah. How many hours did they had at work? Oh. Received $100 the amount owed by customers for flowers. Okay, so we received what? Cash. What is it? Asset. Do we have more or less? More. What do you want to credit for 100? Accounts receivable. Why? Why is that in sales? You already recorded the sales. Don't do it twice. You'll double your sales in your income statement, wouldn't you? Double it up. Yeah, don't do that. Right? What if it was a cash sale? What if they gave me the cash at the same time I gave them the flowers? Well, then debit cash and credit sales. Don't you think? What if they paid me in advance? I would debit cash and credit a liability called unearned revenue. That's for those of you who have gone on to chapter 4, right? Or have done accounting before. We'll be doing it real soon. And then what would you do when you earn it? Well, you don't have the liability anymore. Debit the unearned revenue. And credit what? Sales, right? Sales revenue, yeah, because now you've earned it. When do you record the debit to cash? How about when you get the cash? When do you record the credit to sales? How about when you deliver the product? That's what that's when you earned it, right? Separate those. When you debit accounts receivable? When I sell something to somebody and they don't pay me? When would I credit it? When they pay me, I don't have a receivable anymore. Right, guys? When would I credit unearned revenue? You guys don't even know about it yet. It's a liability. I owe the customer product. No, when would I credit it? I debit cash and credit the unearned revenue because they paid me and I gave them nothing. So now I owe them what? This goods or services. Yeah, it's just common sense. Okay, and then I deliver the goods or services. What do I want to do because I delivered the goods or services? Credit what? The revenue. That's when I have the sale. But I'm not going to debit cash because they're not paying me again. I'm not going to debit accounts receivable because they're not paying me later. What am I going to debit? The liability unearned revenue because I don't owe them the product if I gave them the product. Huh? Head around this. Okay? You've never had anybody do this to you before, have you? You're not the only person in the room. Nobody has. The worst teacher on earth. I make you guys think. As you're reading, don't just read it. Figure it out. Don't waste your time. Don't read this book twice. What for? I never, ever read anything a second time. Unless the author repeats himself and I'm pissed. So I read it carefully the first time. This whole idea. You write an introduction to a paper where you say everything you're going to say. Then you say everything you're going to say. And then you have a conclusion at the other end. Do this in your English classes, by the way, you'll flunk out otherwise. And then on the other end, right, you write up a summary. In business writing, we just say it. And you might put bullet points on to tell people what you're going to say, It's got a heading. A is, or 1 is something. Then we talk about it. 2 is something, and you talk about it. You can do that if you want. Otherwise, you're wasting your boss's time, and your boss is making $1,000 an hour, and they are really pissed. So throw it back at it. Stop that. You wasted time doing that, and now you're wasting my time reading it. Don't tell your English professor that, okay? Wouldn't look very good anyway when it's written that way. It wouldn't be fair. It's fun to read. Okay, anyway, it's not supposed to be fun. You can money. Okay, debit cash and credit what? Yeah, we said accounts receivable. Excellent. You know what? That's exchanging 2 assets. You can exchange. We can't do a day without writing this down. I do an intermediate every day. That's because it's the model, guys. It's the financial statements, balance sheet, income statement. We just exchanged an asset for an asset, didn't we? Yeah. The one before that was exchanging a liability, reducing a liability, and reducing an asset. Right? Everybody agree with that? That's what's happening, isn't it? And each one, you can exchange, let's go through this real quick. You can exchange an asset for an asset. You can exchange an asset for a liability. You can exchange an asset for equity. You can exchange an asset for revenue. You can exchange an asset for expense. You can exchange a liability for an equity. Or an asset, of course, we already did that. You can exchange a liability for a revenue. You can exchange a liability for an expense. You can exchange equity for assets, liabilities, and revenues and expenses. You can exchange expenses for revenues. You can do all kinds of stuff here. Wait a minute. Yeah, you can. Okay? Yeah. You gotta have a debit and credit. Okay? Yeah. Wow. And they go both directions. I can debit cash and credit notes payable, which is increasing this one and increasing this one. And then what I can do is I can credit cash and debit notes payable when I pay it back. We did it. Right? You can go both ways. Everything can be exchanged for everything. Isn't that cool? It is. If you realize that and you relax about it, you just let yourself figure out what happened. You're not going to be constrained by the ridiculous rules, right? I have students who will give me these strange journal entries, and I look at, what are they doing? Oh, they're trying to only debit assets. What? They only go up? They never go down? Really? Wouldn't that be cool? I buy assets and I never have to use them up. I get to keep them forever. I wish my wife's Volvo was that way. It's got 130,000 miles on it. I think it's got another 100 left. She doesn't because she wants to be caught. Okay. So, hold it off. She quit working to take care of the grandkids. Now she wants another Volvo. What's that about? Or a Mustang or something. She was eclectic taste. Have you guys seen my Miata yet? It's not really mine. It's my wife. She handed it down to me. I haven't bought a car since I met the woman. It's because I don't care about money. That's why I'm standing here. I really don't. I don't care about stuff very much. Miata's a great car, though. I really like it. And I look cute in it. That's how my wife convinced me to buy it. She put a picture of a Miata on the refrigerator for 2 years. $30,000 for 2 seats. 10 years ago. No, 12 years ago. I put 1,500 miles a year on it, though. How long will it last? It's only got 72,000 on it now. How long will it last? How long will I last compared to the car? I can be buried in it, no problem. Now, I'll give it to my grandson. I told my daughter that. And she says, no, he'll kill himself in it. He's 5. No, 6 now. He probably would now. I'm not planning on dying anytime soon, so he's going to get really worn out Miata. Hired an employee agreeing to pay her $150 a week starting next week. Okay? What's your only for that one? I hear nothing. Why? We just have an agreement to do something, we get done nothing. We don't record stuff we haven't done yet. Sound good? What if we paid her in advance? Well, now you'd have to credit cash and debit prepaid wages. For her unearned, for us prepaid. Leave that in chapter 4. Okay? Yeah. Right? What if she'd already worked for us? And what would we do now? If she worked for us, what would we have? If she worked for us, what would we have? We'd have expense. Yeah, wage expense, salary expense, something like that. Some sort of payroll expense. Yeah, we'd have the expense. And we would have an accrual, we call it, of what? I've not given her cash yet. I haven't paid her, so what would I have? What? Yeah, you guys, she worked for us. We used it up, so we have the expense. We haven't paid her, so what do we have? Don't you think you owe her wages? What do we call things that we owe people? Liabilities. But what's the name we use to make sure everybody knows it's a liability? Payable. And this is for salaries or wages. Guess what you call it? Wages payable or salaries payable. Sound good? Absolutely. What if she worked and we paid her? That one's easy. She worked, so we have what? Wage expense, salary expense. We paid her, that's debit. So then what would you credit? Cash. By the way, why is it debit wage expense? Why am I saying debit expenses over and over here? I have more expense. I am increasing the expense, right guys? And how do you increase expenses? With a debit. Why? Because they have to be the opposite of revenues, and revenues are credits. You can remember it that way, that's okay. Otherwise, how could you take the difference between them? Because we don't remember what to add and subtract, right? We just take the difference between debits and credits all the time. We're always netting them out. Okay, so, but why are revenues credits? What do revenues do to your wealth? Increase it. So equities on the right is increased with the credits, so revenues have to be credits, right? So expenses have to be the opposite, so they have to be debits. But as I increase those expenses, what am I doing to my wealth? I'm reducing it. So this turns your brain inside out, right? As I increase the expense, I am reducing net income, which reduces wealth. So as those expenses are debited, wealth is going down, right? You have to sort of get your head around that. Everybody got this? Okay. How many people have said they had accounting in high school? This is exactly how you did it, right? Wrong. What did they have you do? Write entry after entry after entry after entry, and what did you do? Memorize. There's only 5 accounts. Why would anybody do that? There's only debits and credits, increasing, decreasing, different accounts, right? Debits sometimes increase, sometimes decrease, right? Credits sometimes increase, sometimes decrease. And there's only 5 kinds of accounts. If you can identify what kind of account you got it made, don't you? What do you have to memorize, guys? Debit means left, or credit is right. So then it's obvious what the other one is, right? And what else do you need to memorize? Assets going left. And then is it obvious that liabilities and equity go on the right? Is this obvious to you now? All my stuff, my assets, either I'm still paying for them or I own them. Right? Isn't it true that of all your stuff, either you're done paying for it or you're still paying for it, right? Either you own it or you don't yet. Isn't it true that for everything, for everybody in the world, for every company, every individual, their liabilities plus their wealth equals the stuff they have? Am I right? Equity is often called net assets, by the way. Assets less your liabilities that you still owe against them is the net asset that you own. What do you think? That's what equity is. Does everybody have it? Why do I keep saying this over and over and over? I'm going to give you a quiz, and you guys are not going to know this. And it drives me nuts. I really want you to know it. A couple of reasons. One, I want this to be a really good school. So I want you to really know things when you leave. Right? That's how we're going to be a good school. Okay, that's it. Okay. Two, I think you're really nice people already. So you got to get your money's worth here. You got to get your time's worth here, right? And three, I'm really a lazy person, and I don't want to have to keep telling you this over and over and over. I want you to get it, right? Did any of you guys notice me and this gentleman over here talking about the problem from chapter 4 and how quickly I explained that to him? And he kind of got it, and he's going to go study it, and I've been doing it again here a little bit, huh? And he's going to really know it. Were you guys at the same point? Did you do this class before? Yeah. Last fall, but I didn't read. Last fall, and you didn't pay attention. Yeah. Now it's back. You take it kind of seriously? No kidding. And you guys think you're taking it seriously, too. A few people sitting in the room did keep up with that conversation, though. Oh, it's chapter 4, and we're only on 1 and 2, right? So why be there? Imagine going to work, right? And you get hired, and 10 other people get hired for exactly the same job. And you come to work knowing 5 times what they would have every day. What do the bosses do? They make you a boss. Well, why don't you teach these other people how to do what you know how to do? Would you mind? Yeah, sure, but that all works. It's such a responsibility and money. You know, it's awful. Every time you get a job, you get up front, damn place, and no one is like back to teaching more. And then they make you get chair forever here. So that means you don't get paid and you have to be responsible for other people. So what am I going to want you to do with this one, guys? Write down no entry. What will I think if you write down nothing? Then you just skip it, you didn't know what to do, and I'll mark it wrong. Everybody hear that? Say something, right? I don't mean right this minute, I mean when you're doing the quiz. Okay, the new employee has now worked 2 weeks and is paid for 2 weeks' work on Saturday afternoon. Okay, whatever. All right. So how much was your week? 1. So how much do they make in 2 weeks? 300. What do we give them? Well, we wouldn't call it employee expense. We'd call it salary wage expense. I don't know why. Nobody calls it employee expense. That would include all the payroll taxes. So we don't usually call it payroll expense either. That would be payroll tax. Okay? And I say, notice they said not usually. Companies can do whatever they want with their accounts. But you like to name things that everybody understands, everybody would be able to figure it out pretty easily. So anybody can read your financial statements, right? Your public company, literally. We could call up Young Brands financial statements right now off the internet here and look at their financial statements, the whole set, right? That's filed with the SEC. Okay, so they're all there, right? For every publicly held company. And for private companies, if you're going to a bank and you want to borrow money in your private company, you think they might want your financial statements? You're going to give them to them, yeah. So anybody has that you want to, if you're a private company, can have access to your statements, okay? Customers might. Vendors are people who sell things to you. Customers are people who buy things from you, right? Okay, so it's just from an all. Okay, anyway, yeah. But anybody can use these financial statements. Okay, so what do you want to do with this 2 weeks? What did we give them? Give them cash, didn't we? Debit or credit? Credit because it's an asset and I have less, right? What do you want to debit for 300? I heard it out there. Wage expense. Why are we debiting it again? Oh, I'm sick of saying it. Aren't you sick of hearing it yet? What's the deal? Yeah, equity's on the right. So I increase with the credit, reduce with the debit. As I increase the expenses with debits, I'm reducing my equity. Right? Yes. Okay, paid rent for this month, $300. Okay, it's rent expense. Why? I used it up this month. Why do I rent my building? So I can generate revenue with it. That's what it's for, right? So it's one of the costs I incur to generate revenue, so I call it an expense, and it happens to be for rent, so I'm going to call it rent expense, right? You know what's really fun about this is you guys look at me and you're like, well, how can it be so easy, and then how could I, people have told me this class is hard. It's weird, isn't it? Because it is easy. Just, can you do it, right? Can you really make the conversion? Can you click through the thing, right? I paid it, what I pay with. Okay. Now, using the entries from this problem, compute the following at month end. I suggested using T accounts. I think that'd be a really good idea. So, what do I mean by that? What's a T account look like? Great big T, okay? So what I think I do is instead of using T accounts for every single type of account, which you could do, and later we will, I think what I'll do is I'll do one for assets, okay? Because I only want this information here, assets, right? Assets, liabilities, equity, revenue, expense, net income. So let's do this. Let's do assets, liabilities, and then we'll have equity. Everybody, that sound good, guys? And then we'll also do one for revenues, and we'll do one for expenses. And what this is going to allow us to do is do a balance sheet and income statement, because the assets, liabilities, and equity are a balance sheet, right, guys? It's just that accounting equation we got going, right? And the revenues and less expenses is the net income. But be careful. As you're changing, well, for instance, on this one with wage expense, when I debited wage expense and I credited cash, I changed the income statement and I changed the balance sheet, both. You agree with that? I increased expenses, reducing my net income, right? And I reduced my cash. How does that keep the balance sheet in balance? What do you think? What I'm going to do is I'm going to take my net income and add it to equity. When I'm done, I have to do that, or I'll be out of balance now. Now, at the end of each year, we're going to use a closing entry, we call it, where we actually physically do that, actually physically move the amount in there. But we don't do that until we're done with the year, because what we do when we do the closing entry is we make all the revenue zero and all the expenses zero. Well, now you wouldn't have an income statement, right? So when you start the year, the balance sheet's in balance. There's no revenue expense accounts, right? So as the year goes on, our balance sheet won't be in balance unless we pick up the total effect of the revenues and the expenses. So this kind of blows your mind for a little while, okay? So let's do this. Let's see what it looks like. This is called posting, by the way. Posting is just copying. So let's copy those journal entries in there, okay? Can we do it? Let's go back up to the top of it. So glad that worked this time. Okay, and it's still in there. Here we go. What's the first entry?
4,000 assets.
Debit cash, that's more assets. 4,000. Everybody see it? Notes payable? Liability. Is my balance sheet in balance? 4,000 equals 4,000 in my world. How about you guys? Sound good? Okay, then what do I have? 10,000 debit to assets. Now I have 14,000 assets. I have 4,000 equity. Everybody agree? Maybe something wrong? Yeah, I got to put 10,000 over here. Oh, jeez. Ah! Okay. 10,000 over here. All right, smart play. Okay. No, it's too big now. It hates me. I'm going to make this thing smaller. It wouldn't do it. Now I got 2 recordings going. Do I really? Yeah, it's not doing anything. Neither does that one do anything. Ta-da. Okay, there we go. All right, so we got 10,000 going into assets and 10,000 into equity. Everybody see it? Right? Debit, credit. Are we still in balance? 14,000 assets, 4,000 liabilities, 10,000 equity. Is 4 plus 10 equal to 14? In my world it is. Yeah, okay. Anyway, then we got what? Equipment? What is that? See, and people say, well, how do I know what they are? What do you mean, how do you know what they are? You did the journal entry. You had to know what they were to do the journal entry. No, didn't you? Okay. And then cash, what's that? An asset, 100. Cash is not a liability. The liability might be what we're paying off, right? But yeah, okay, be careful. Okay, and then notes payable? That's 800 of liability. Are we still in balance? Of course we are. Okay? All right, and then what? More supplies inventory, 300. I have more assets. And? Yeah, 300 of liabilities. Everybody getting the drift on this thing? Okay? All right, and then what? I guess I can't see it. Oh, what? Here we go. What do we get? 600 of cash, everybody agree? Is that the next one? 200 of accounts receivable, that's the next one. More assets, and what? Revenue, right? Revenue of 800, okay? I didn't leave myself enough room. By the way, it's as bad as this with a real blackboard too, so this isn't making much difference. Okay. Terrible. Okay, anyway, so what do we got? Revenue was how much? 800. Are we still in balance? Well, the total assets don't equal the liability plus equity anymore unless we do what? We got to add this 800 to equity, right? To do the financial statement, we're going to have to do that. That's it. Okay, so don't forget to do that when you're done. Okay, anyway, so now what do we got? Debit notes payable, what's that? Liability, that reduces the liability. Notice I'm putting the debits on the left and the credits on the right. I guess I didn't say that. I am, aren't I? What a brilliant guy, yeah. So.
What about unfunded in your asset? Could you put a parenthesis around that?
Oh, no. Put it in the same column and put it parentheses around. Don't do that. Just
No.
put it on the left and the right.
I know put it on the right, but would you still?
Oh, no, you do not have to put a minus sign or parentheses or anything. I wish the author didn't use those plus and minus signs. Don't do that. When you're doing journal entries, don't put plus and minus next to it. We know it's plus or minus.
Okay.
We know if it's debit and asset, it's plus. We know if it's debit or liability, it's minus. Don't put those minuses and pluses on. Okay, you don't have to do that. Right? That's a waste of time. Nobody does that. Okay? The author's trying to make it easier for you by making it more confusing. Yes. I don't know what that's for. Okay, you don't need all that plus and minus nonsense. Yeah, we know debits increase assets, and we know debits reduce liabilities and equity, and debits reduce revenues, and debits increase expenses. So what? We don't need to put plus and minus next to every single journal entry to know that, do we? If you know what kind of an account it is, and you know whether you debit or credit, you got it paid, right? Okay, it's the way the language works. Okay, that's a good question. Okay, so don't mess with all that. Okay, then where were we on the notes payable? Were we 500? I did the debit. Oh, that's one thing too. Always finish your whole entry, or you'll be out of balance. And then we got interest expense. Ah, that's an expense. So put 8 expense down here. Everybody like that? And then we got cash going out of 500. Do you see that we stayed in balance doing that? You know, there's a debt. Whoops, the cash is 580. Okay, all right. So I've got 500 debit to liabilities, 8 debit to expense, and 508 credit to an asset, don't it?
The 8 would be in the bracket column, for instance?
Yeah. Oh, no. What are expenses? Careful. Expenses are increased with a what? Debit, right? Why are expenses increased with a debit? Because equity is a subset of equity. Equity is on the right-hand side, right? So revenues must be credits increasing it. Expenses must be debits reducing it. Got it? Okay. By the way, is that a good question to ask? Oh, yeah. Right when it's in your head, ask that question. Always ask yourself questions as you're reading and you're working problems. What am I doing? Don't just do it. I'm not collecting the homework and giving you credit for it. Don't copy what the author did, and you might do that on the first problem, right? But as you're doing it, figure out what you're doing so you don't have to do that again, right? How many times do you want to listen to me talk about this stuff? Never. So once is enough, huh? Why are you making me say it over and over and over? Because you're human beings, and we don't learn that way, right? We don't just listen to something to know it, okay? We have to pound through it. We have to think about it. We have to integrate it, okay? We're not computers, okay? But then computers can't create anything. So, not really. Okay? Hopefully never. Or they'll just get rid of us. Ever see that old movie, 2001 or something, Space Odyssey? HAL? Yeah. I don't know, maybe. Okay. I liked, my intermediate students suggested that what I could do when I'm teaching this class twice in the fall is record the first session and then just let it run for the second session. Go home. You know, why not? Why don't we just record stuff once and then never do anything again as long as we live? That'd be great. As long as we got paid. Okay, is this the next one? Accounts payable? What do you want to do? I didn't skip any, did I? Don't let me skip any or we'll be in big trouble. 300 here. Okay, you guys are writing this down so you can add it up on something you can see, right? Okay, and then what do we do on the next one? Cash is an asset and accounts receivable is an asset. You see it? That's cash and accounts receivable. Easy, huh? Okay. No entry on the following one. That's no problem with that. Okay, so let's do wage expense and cash. What do you want to do? Wage expense is a what? Debit. 300 there. Everybody good? Okay, and then cash is going to be an asset. 300 credit there, right? Then the last entry happens to be the same thing, right? Only it's rent expense and cash. So we put rent expense in here, 300, and then we take out of the assets because cash is an asset. Okay, now I posted every entry. I hope I got all the debits and credits right. Okay, so I posted every debit as a debit. I posted every credit as a credit. There I got them right. Posted, just make copy. Wow, neat to know that. That's what people call it. They don't say they copy it from the journal entries. They don't say they copy it from the journal entries into the general ledger, is what that T account represents, right? Computer file, like nowadays, using sheets of paper with debit and credit columns to keep track of the balance was. Right now we do it in a computer record, right? But still the same thing. Okay, so we don't say we copy it, we say we're supposed to do, okay? All right, and then you've got to total it up, right? And of course the computer would be totaling it for you. People don't have to do this anymore. But somebody tell me what the total assets is then. And you know what? These are the answers. This is it. Is this a hard problem, by the way? You have to have every single journal entry right to get these ones at the bottom here. So yes, it's a hard problem. Somebody do the assets.
14,792.
14,7 what?
792.
They're all even hundreds. 14,000.
508 minus 508.
The total assets, 14 plus 10 plus 9 plus 3 plus 6 plus 2 plus 1 less 508. Oh, wait, there was 508, I'm sorry. How much?
14,792.
14,792.
I have 14,492.
I did too.
Oh, no. You mean you guys can't even add and subtract? You know what? It'd be okay. If you made a math error, you're going to find out. So we can prove which one of these is right. Okay? It sounded like more people like 492, but did anybody else get 792? Yeah, well, probably it's wrong. But you don't get that when you're doing the quiz, do you? You only have your own. So here's how we do it. We get the total, whatever you get, and then let's get the total liabilities. What are you going to get on liabilities? Looks like a credit. Come on, you guys.
4,300.
4,300. Then equities, 10, but it's not really 10, is it? Because we got to pick up the 800 revenues, and then what's the total expenses? 608. Would everybody agree with that? What's my net income? Anybody tell me what my net income is? You know, if you knew the revenues less the expenses, you'd know the net income, wouldn't you? See that credit 800 for revenues? You see the credit 800 for revenues? You see the 608 debit for expenses? What's the net credit, the difference between those two in your income statement? It looks like 192 to me. Your net income is 192 if we did it right. Is that correct? Is it 192? Okay, and that's a credit, isn't it? So if you got a credit for the net income, and then we're going to add that to equity. So what's your total equity? Oh, that 192 is going to be in there when you close equity, isn't it? Everybody agree? I'm going to take the revenues and put them into retained earnings. I'm going to take the expenses and take them out of retained earnings, right? So the net 192 net income is going to end up in retained earnings, isn't it? I am $192 richer because I ran my business. Got it? Okay? So what's my equity? It's not 10,000. What is it? 10,192. So let's try this. Super right. Equity, I think, is 10,192. Liabilities, I think, is 4,300. Are those debits or credits, you guys? They're both credits, aren't they? Because they're on the right-hand side of the accounting equation, aren't they? Right? They're both credits. We know they're credits. Look at that. 4,300 credit right there. And then I've got a 10,000 plus 192, 10,192 credits. Right? Those are credits. What should my total assets be? Well, add the two together. What's 4,300 plus 10,192? 14,492. Am I right about that? Of course it is. Those two add up to this one. Liabilities plus equity add up to assets, of course. Look at that. Whoops. Look at that. We were right. 14,492. So, who had that wrong? Geez, you can't even add. You're as bad as me. Okay, but it doesn't matter, right? Because would you have found out your error? Sure, you add up your liabilities plus your equity. You say, wait a minute, that's not right. And then what would you do? Go check your number. You're right. Okay. All right, gang. Was this easy? What's total revenues? 800, but there weren't very many transactions, right? So we didn't have very much there. It only had one for revenues. And the expenses, 608. And the net income is, of course, the difference between the two. The revenues is a credit, isn't it? And that's a debit. And then the difference is 192. Now, you know what's interesting? That's my net income, right? Yeah, we thought it was. You know, what's interesting about this is that drives people crazy. Because you know what? No. A credit must mean I lost money. No, credits reduce assets. Credits increase equity. Credit means you made money. Get away from that. Debit meaning good or plus, and credit meaning bad or minus, right? Anybody ever work in a bank in here? Used to, you get visit with the banks, but I guess they don't have tickets. Okay. Banking is backwards. Bankers say that they're crediting your account when they put money in your account. You know what they're crediting? Their liability to you. When you put money in your account, they owe you more. Don't they owe you the money you have in your bank account? Yeah, yours, right? So it's a liability for them. So when they credit your account increasing it, they're doing it right. They're increasing the liability. What do they do when you take money out? They debit your account. What are they doing? They're decreasing their liability. Of course they're doing it right. So I always get people that have done banking before and say, oh, no, I just can't learn accounting because it's backwards. No, it's not. You just didn't know what you were doing when you were working at the bank. Now you do. And it's just, oh, wow, that's cool. Okay, anyway. So you gotta know which side of the deal you're on, right? Who are you? Okay? All right, well, I'm sick of this. Everybody got that one? Oh, let's stop recording if I can find out where I'm recording. I've only got about 20 of them out here. Okay. 24 minutes went in pretty easy. You guys saw maybe that it was out there? So stop already. Oh, that's recorded.